Hey, good morning, traders. This is Rick with Hit and Run Candlesticks. Today is Friday, October 16th, 2020. So happy Friday to everybody, and I absolutely wish you a wonderful weekend. Speaking of the weekend, I want to mention that tomorrow morning I will have a watch list out for charts to ponder. I'll get that out pretty early in the morning, Saturday morning. So we've got some stocks to look at over the weekend and consider. You might want to consider if there are trades that you want to take a look at, charts you want to take a look at. And feel free to, I'll get those out on YouTube, and feel free to ask questions about them, and I'll see if I can get those questions answered through the weekend. All right, let's take a look at the market here. I've been using the 3-bar chart quite a bit lately, and I find it very useful, so we'll kind of go back and forth, 3-bar chart and daily chart here. Let's start with a daily chart on a SPY. We've obviously rallied up. Here we've pulled back. We gapped down yesterday, and we had a good comeback yesterday. Really good comeback. We can break that down. If you want to see what yesterday's candle actually did in 3 parts, what I do is use the 130-minute chart, and then that gives me the candle broken down into 3 parts. And I find that very easy, very pleasing. It makes sense. It keeps the chart somewhat clean. And that's one of the main reasons, the main reasons I take a look at it. Now you can see here that we gapped down yesterday. Here's our first candle. Bulls came back up. We closed higher than we opened. Then the second bar came in for the day. And again, we closed higher than we opened. And then the third bar came in yesterday. And again, we closed higher than we opened. But one thing we didn't do is we really didn't get through this resistance right here. And that is concerning. Now, it's just simply concerning that it didn't get through there. All it would take would be a pop-up today, get through here today, and if we can build that consolidation over, what is this, say about that 348.10 level, so pretty much over the T-line, where the T-line ended up yesterday, is what we need to be over. And that would actually break out of this downtrend line, and it would also put price above this resistance line right here. I guess I have the technology, I could do this. It would put price above this resistant line right there. There it is, okay? And that resistance line then would or could become support if price can hold over that line. Let's take a look at the Qs. Qs, a bit of work yet. You can see that didn't quite muster up as much as the SPY did. You can see how yesterday's candle, daily candle, was broken down on the Qs into 3 bars. Bullish candle after the open. We opened, we closed higher. Then we ended up with an inside day with follow through, but the follow through again did not get us up high enough to be like crazy bullish. So what we need to see is price move up, and I would say over that 291 and a quarter, move up over 291 and a quarter, consolidate, prove you can hold that level, and then the Qs may be back in good form for us. Let's take a look at the diamonds. You can see how, let's get rid of that. There we go. You can see how the diamonds came up, and I guess well, you know what, I'm just not going to do it. We did not get through the body here. I get asked all the time, do I use the body or do I use the wicks? I use both. It all really depends on the chart. And the reality is, what are we going to do? We're just talking pennies. But I use both. And it really depends on the chart, how the whole chart is arranged, what that price action is. But I do use both. And right now, I'm thinking we need to be above 285.04. I can see right now the diamonds are actually gapping up a little bit, and they're sitting at this 205.55 area. Remember, I'm about 2 hours behind the market right now, so 2 hours early. So anything can happen in a couple hours. IWM, let's take a look at IWM. Now, IWM really came together yesterday, didn't it? Take a look at this. We've got our downtrend here. Let's put this down. There's our downtrend line. We did gap down. The whole market gapped down yesterday. Bulls brought it back up. We had absolute follow through on the third bar of the day, with continued follow through of the third bar, or the last bar of yesterday, closing up over the T line and actually closing over our 3 EMA that creates our trap line up here. Let's take a look at the daily chart here. Look at that. Man, that is a beautiful looking chart. IWM right now is set up in a 3/8 trap trade, and you know how much we love this trade right here. Absolutely love it. Okay, let's take a look at some charts. Okay, yesterday, toward the end of the day, I bought some HUN, and I think that's still set up for a buy. We have a chart that was in the 3/8 trap yesterday with a doji. I'm sorry, day before yesterday, excuse me, right here on this doji. 3/8 trap in the doji, 3/8 trap with the doji, followed by a nice bullish candle here that broke out of the upper trap line here. We got into that yesterday. I'm expecting that to move up a little bit. Let's take a look at this chart. Very, very nice chart. See how we've run up here and then we've pulled back? I would call that a cup, and I would call this a little handle right in here. Let's bring out another line. Take a look how we created a low, high, higher low, went to a higher high. Let's pull out another line, and look how we created a bullish W pattern, and we've broken out of that W pattern. Huntsman, HUN, has a lot going for it here, and I really like that chart. Excellent looking chart. I don't see any reason why it can't get up here. Let's shrink those up a little bit. 24, man, that could be a $30 chart coming up. So, like I said, I'm already in it. It's something I'll consider possibly adding to it. I think we need to start looking at Intel again if you're out of it. Now, we were in Intel and we sold Intel. Intel has pulled back, and now it looks like the bulls are stepping back in. We've got a 3/8 trap set up with price between the T line and the 3 EMA here. We've got a nice trend on Intel moving up. Bullish piercing candle yesterday, so I'm looking at buying Intel on follow through, or a buy in the box buy right here. So either a breakout up or inside this area right in here. Hey, speaking of the 3/8 trap, I believe there's only I'm maybe 7 or 8 spots left, but my good friend with Doug with Right Way Options is teaching a class this 29th of this month. You really should consider it. I think Doug he's got this 3/8 trap down pat, and he has got a fantastic class on it. I would urge everyone to consider it. There are only, I'm guessing, like 7, 8, 9 spots left. And I promise you there's only going to be 30 spots sold. So the class is not going to be very big. It comes with all the whistles and bells. So I'll put the link down below. And if you're remotely interested, please check it out. Okay. Alrighty, let's keep looking here. GPS. This is another stock that's setting up in that 3/8 trap. You can see we've got a nice little trend here. We're set up in that 3/8 trap. We've got a doji bullish engulf. A pop out could get us up to 2170, then 2360 over here. FCX is another one to keep an eye on. Another little kind of a cup and handle. Let me draw this out here. There's your cup. Here's your handle right in here. You could even look at this as a bullish J hook starting from here up, and there's your J being made right in there. Let's put a line right here. We do have a little bit of a top here to break through. I'm not too convinced about that. That's what they make stops for. So I'm looking at this chart pattern from here up. I'm looking at the bullish intention in this. I'm looking for this to go higher. I see a doji bullish engulf. I see nothing but positive for this right now. So I'm looking to get into FCX, and a breakout could get us an easy 10-20% move on the option there. Very easy. And yeah, I want to mention that when I'm looking at my stocks here, they're both stock trades and option trades. So you don't have to be an option trader. But let's not get too concerned there for you stock traders. When I trade an option, it's just a simple directional call and put. It's easy peasy. If you ever need some help with that, get a hold of me in the trading room. Let me explain it to you. It is super easy peasy. All right. OKE. Man, this has turned out to be a nice little trade for a few folks in the trading room. They bought it back here. I'm not in it. We need to break out. But right in here, I think the chart is set up to do that, to break out. So we've got, we're in the trap yesterday. You can see we gapped down like most everything yesterday. We gapped down, we came back up, we closed in the trap area above 29.45. I would absolutely be bullish. Anything above that, we break through this this 31 area. Man, I'm kind of looking at 39 up here for a target on this OKE. Great looking chart. You can see up here, it's a rounded bottom breakout. It's a 3/8 trap. This right here, this represents that it's above my 15-minute 200 period moving average right here. So that's what that does. And great looking bottom, great price action, smooth chart, looks great. Let's take a look at a bit of X. Take a look at a little bit of X. X has been creating a bottom down here. Let's start here. We've got this low. We gapped up. Right there was a beautiful chart pattern to be in. We rallied up. We hit some resistance, and now we've pulled back to the T-line. We were in the trap yesterday. We were in the trap 2 days ago, as well as several days ago. And then yesterday, we saw a low come back down to the T-line, not quite a lower low. And then we closed up very nice with a bullish engulf. We start breaking out over 875. I would say we're going to get to 935. And from there, I see that $10 area being tagged on X. Okay, let's look up at space. Take a look at the stars. This chart's looking really, really good. You can see we've got a nice trend on it here. We've got a nice move up, a little bit of a pullback. We've got resistance right through this area, right here. We've got resistance right there. We've rallied up and pulled back, and we tested that resistance. Now that becomes support when price is over it. We've got price in the we've got price in the 3/8 trap here. We also have a nice bullish engulf, nice healthy bullish engulf here that has come up, rested, pulled back, and we're on an inside day. Both these candles are an inside day of this candle. And I think that is a positive. I think that's positive price action. The candle today, we start seeing positive trading. That might be worth a look, and I will be taking a serious look at this for an entry. Watch this 24.55 for a target. You know, I'm actually going to adjust that a little bit. Let's bring that down just a little. Watch 24, just over 24. And then we'll look at 27 up here as a possible target. Okay, for all you Tesla lovers out there, Tesla continues to hold its own, doing a great job. I see a lot of chatter that Tesla's heading to 500, and right now, sure looks like it to me. The trend is up, low, high, higher, low. We've run up to a higher high. We have a doji in the 3/8 trap right now. So any kind of positive trading, by the way, for me would be anything in the trap area. I'm okay with that as positive trading. If it starts to push out the top, this is where we might look for that entry running toward that $500 level and possibly higher in coming days. How about a little pot out there? CGC, if you missed this big run up, it's pulled back. It printed a hammer yesterday. Printed a nice little hammer right off the T-line inside the trap area. So I think what I'm going to do is look for, long as we stay over yesterday's low, let's put the buy box in there. I will be considering a buy in that area. My stop will be the low of yesterday. And my tradable target up here that I might be looking at, what it can do for me, that 2160 up into this area over here, this May high. Here's another nice looking chart. Excuse me. If you're looking for a slow mover, a chart that doesn't get too excited too often, but it's a good solid, nice chart. And that's GLW Corning. Corning has rallied up, broken out over this resistance right here. And we went up a little higher. Here we've pulled back. We didn't quite get to that resistance. We got to the T-line inside the trap. Yesterday we also closed inside the trap with a little bullish engulf. A lot of engulfs yesterday. What we're watching now is a possible buy on a breakout. And you know what? I'm going to adjust that to a possible buy. Here, I'm going to do it like that right there. So an inside day buy. And right now, looks like right now it's, let me check here real quick. There we go. Right now it looks like we're opening up about the high of yesterday. So I'm looking for a buy inside this area or here or the breakout. So this whole area to me is a buy. You as a trader, you've got your rules. Just trade your rules, trade your plan. If you need a little help, come on in the trading room and check it out. We have, if you've not tried out the Hit and Run Candlesticks trading room, I'm pretty sure in the text below the video there's a link for a 60-day trial. $49. Look, you can't beat it. It's worth every penny and more. So come on in the trading room. Hey, it's Friday. I want to say thank you to everybody. Thank you for all your participation this week. Remember, the trading room is still open today to the public. I will put the link down below. You can also find it on Twitter. Check my Twitter feed out. It's Candlestick Trading, Rick Sadler /Twitter. And I post, I don't know, half a dozen times during the day on Twitter. So you might pick up some good ideas. And, you might pick up a few things. All right, you guys all have a wonderful day and have a great weekend ahead of us, okay? See you later.